Hello, this is Andrew from Trend Following Mentor. It's the 22nd of November, and we're going to do the basically the weekend update for trend following on high growth stocks. And always we do is we look at the market and we look at we look at the positives, we look at the negatives, and we had a scare last Friday, and there was a tremendous amount of puts that were bought, which showed a lot of fear because of what happened in France, unfortunately. And the market does what it always does. It surprises everybody. So what we do is we always keep to a plan. We look from a technical level, not our opinions or our fears or our greeds. We look at what the market is actually doing. And you can see this was Friday of last week, and then we start turning around. And actually, we're in a very seasonally strong time that that's on the positive. We've had a lot of put volume, which is also positive because a lot of fear will drive the market up. So we combine a combination of technical and fundamentals, but we use very simple rules to know when we should be in the market, when we shouldn't be in the market. This is the 200-day moving average. These are the 30. I'm sorry, this is right here is the 10, the 30, and I have this very special indicator called the Andrew Abraham buy. If you use MetaStock, I will give you the indicator for free. You can see when to be bearish, when to be bullish. The other thing is you have to know where we are in the cycle. We're almost going on 7 years of one of the longest running bull markets, which party doesn't last forever. I mean, a lot of people got sucked into this. A lot of hedge funds really lost a lot of money. They were still long. Then they started going short up here. So they got whipped around. When we see things like this, when we're below a 200-day moving average, we're out. That's really the line of demarcation. So the point of this video is we're going to talk about this week's watch list. And as many of you know, Amazon is really one of the leaders. And we combine a combination of fundamentals where we look at earnings. And obviously the earnings on Amazon are just blowing doors. And then we look for patterns. What we do is we look at the weekly. The weekly, you can see it much easier. And you have a cut. And you buy the breakout. This is kind of what we talk about, is buying breakouts. And you can see here's one here, breakout here, then you had another one here, and that's where we're at. So you look at the weeklies first, jump down to the dailies, but you combine the technicals with the fundamentals. And then what happens is people get spooked out on these things where we gap up, and many people don't know how to run gaps. And I'm going to show that in Facebook. I draw a line. Let me get rid of this. I draw a line above, and I draw a line below. I know I want to be in this. So hypothetically, we gap. We didn't go below. Right here would be where I'd be buying this. Actually, I did buy Amazon, and this is where it becomes a little bit of an art and a science. Because when you have these breakouts, they're all kind of happening at the same time. So I didn't take Amazon, and Amazon looks like it's moving, and Amazon is unique. There's not that many Amazons out there. And that also kind of leads me to Facebook. I did do Facebook. I did buy Facebook. There's an early entry here, but we were actually below the 200-day moving average, so I didn't take this here. I bought the breakout here. I'm in it. The thing is also, when you're in a trade, you want to maximize it when it's working, because not all of these are going to work. And watch these words, work. It means the trades work. Basically, you've combined an idea of something new in the company, which Facebook is probably going to start monetizing Instagram and WhatsApp. So they're going to have a new income stream, huge income stream. Amazon has new, where they have all these clouds and all this other new stuff happening. So there's something new. We're on a buy on the stock market. We're breaking out. Let's see what happens. You buy the breakout and you scale into the breakout. Then, as this gap that I just mentioned before, we gap up. Well, great. Then we turn down. I bought here. And this wasn't fun, but this is what trading is. You have to go with a set of rules. I put in my stop, 7% below this entry. I scaled in here. As it is right now, the trade is working. I have no idea if the trade will keep on working, but this is what we do. We put them on. Everything is calculated. We scale in 50% at our breakout, then another 30% Again, you pick the rules. These are your rules, not mine. It could be 3% higher than the breakout, or it could be 4% higher, but you scale as it's moving. Why do we have rules? Let's look at our old favorite. This is rules. This is the 50-period moving average. We're below it. We don't want to be in this thing. And also the profitability is falling out. I mean, this is an ugly move. Cheap can get cheaper. So that's also what I want to point out. But let's talk about the good stuff that I'm looking to buy. I'm in Lithia. Has a lot of reasons fundamentally why it'll work. And we have to be patient. I got in here. I bought my 50% position. Then this Friday, this terrible thing that happened in France, my second buy, which was 30% of my position, got taken out. But you know what? I'm going to look to buy again. And I'm going to add 10% to that if it turns up here again. So Lithia is on my watch list to buy more. Palo Alto, an old favorite. You can just remember all of these moves. I'm looking to buy Palo Alto again if it can come up somewhere around this range. So it's on my watch list. Just watching, nothing hurting. Regeneron. This is interesting. This is one of the major biotechs, favorites from last year, very profitable, making a lot of money, got, hit, and you avoided all of this because you're looking for breakouts. I'm looking to buy the breakout a little bit above here. I have a little bit of a handle, and let's see what happens. Another one on my watch list should be, let's say here, actually, let me put it on here, is Constellation. 1 second. Put it on, 1 second. This also is on my watch list, and there's a thing called a 3-week tight, which you can just kind of do something like this, or we can make it even easier, weekly. You want to see a breakout. You see a breakout here. You had another one here, even though it probably didn't work. But the thing with Constellation, there's something new. They just bought out a company in California, a beer company, and they're going to make more money. So this is what it all boils down to, is making money. Look at this stock from 2012. It went from 20 to 137 so far. It's really amazing. This is how we can make money. But let me be very, very, very clear. This is not easy. Here's my disclosure. People do lose money trading. It is very, very, very hard. That is why you need rules. I mean, look at this. Let me just show you why you need rules. We showed about Chipolita, but this was another one that just completely fell out of bed. This was a winner, stock that worked. Let me get rid of that. Sorry. Early breakout, breaking out to new highs. Boom. Look at this volume that's going into this selling. And you had your largest day down here, tremendous move from 37 to 31. That's enough of a signal to get you out. And then you have the 50-day line to get you out. This is what I'm talking about, how stock trading is risky. Don't do this with money that you can't lose. This is why I teach. Well, let's hope this opens. These are the products. I have the Bible of Trend Following, the Bible of Compounding Money. I have hourly consulting to help you put together your trading plans. And I have a course. If I can help you in any way, just let me know. I'm here to help you. Understand this. It's not a weekend thing. It takes time. It takes commitment. It has to be your passion in order to make money over time. Thank you very much.